So the bullish order block was triggered to, that is the green candle. It was traded to 2 weeks ago. It was traded to the eye of this candle falls in at 103.101. The eye of this very candle. So this is the bullish bearish order block. And you can see the market traded to it here. So the movements of the market had gotten to that level already. So on personal opinion, I'm seeing nothing bullish in dollar index at the moment, because the market has not tipped its finger into the real movement. So I still believe we have unfinished business here, down here, down here. There's a stop loss, set stop and sell side liquidity resting below this equal low here, because the market has traded to the consequence encroachment, the monthly candle consequence encroachment here, and this is the low of that week, and this is the midpoint of the week. That is on the monthly chart. So the movement here was traded to this low here, then the market reverses, and the market also reverses from the consequent encroachment of this week. Let's see. The week that was formed here, you can see the market touches the midpoint of that. Let me see. Don't want to cherry pick anything. It's okay. It was cherry picked, Let's analyze the market even before it opens, before the movement starts. I'm doing it from my phone. So I want to get the accurate. I don't want to. What is the I comes in at 103.101 also. 103.101. I'm trying to get the figure here. Okay, let me do that this way. Let me get the coordinates. 103, 101, 103, so 101. Okay. No, we are perfect here. We are good to go. Now, The consequence encroachment of this fib which I drew falls in at 102.766. 102.766. Now let's see the high of last week candle. The high of last week candle comes in at what? 102.764. Is that a coincidence? No. The high is here. 102.764. We have the consequent encroachment of this week at 102.766. Difference of just 2 pips. So the market is yet to show any interest of going higher. Okay, let me do this to make it clear. What I drew and how I drew the fib, I took the eye of this candle here, the eye of this candle here, up to the closing, price. What was the closing price? Let's look at it together. The eye was 103.101, while the closing price was 102.435. Now let's pull up our fib again. 103.101 up to what? Up to this level. 102. 102.439. 102.439. 102.439. And this was 103.1. Okay. 103.101. Are we good? 103.101 was the high. 102.435, sorry, 0.435 is the closing price. Are we together? 0.435 is the what? Is the closing price, which is what we have on the 1435, which is what we have on our feed. Is it? This is the highest point falls in at 1.2768, 1.2768, and the high of this candle comes in at what? 1.102.764. I think that is around 4 pipettes. This is the number we are talking about here. It's just short of 4 pipettes. This is the edge here, and this is the consequent encroachment of that what? Of that wick. So personally, I'm not in any way bullish on US dollar for now. Let the market show more interest, but personal view, I had the opinion of seeing the market, if possible, drop further, and if we are not going further down, this will be the next level of our interest. This will be the next level of interest here. This will be a buy side liquidity. That will be a buy side liquidity. That will be a buy side liquidity. Let me have the eye of this other block here. The eye 104.263. That will be the long term objective if we are not dropping further. But before we get to that level, we will have this level to fight through. Let me close. We will have this level, which is the previous week's high. The previous week's high here. We will have here. Then the main threshold of this other block before this level. So the main, let me pick the main threshold of this level here. So the moment this eye is attacked, only then I'll consider dollar to go high. But if we are still below that swing high, then I'm still bearish on dollar. So that's the premise we have on dollar index. So dollar index is a baseline. So that's why we tend to be to spend enough time on it. You can see last week movement is somehow choppy. These are the market I want to trade. I don't want to be in a market condition like this. It's too rough. So the market can go either way. But the coming week, we see where the market will displace, wherever it displays to, either it displays and take this low, but I prefer taking this low than going for this high, this low here, then continue down here. Let's see a quick one on Euro USD. You can see what we have on Euro USD, on the same thing. I prefer Euro USD taking out this high, and clearing this liquidity pool here, this buy side liquidity. I mean, some should clear this high here rather than going to this low. So a quick run on Nasdaq. Nasdaq has been bullish. Has been bullish. Has been bullish. So this is last week business. Has been bullish because Nasdaq has taken out the levels I anticipated in December. That is why I have no interest in it for now. But you can see this consequence encouragement, this red dotted line, the red dotted line serves as support to send it back up. In the coming week, I expect the market to take out this high. Oh, I expect the market to take out this swing high. It looks suspicious. I expect the market to take out that high. Let's see what happens on the daily chart. This is a live analysis. I've never opened this chart in the past 2 weeks. This particular chart, I've not opened it for the past 1 week. So equal highs here. So expect it to be rated. We have this high, this swing high here. There is is more like this swing high. So we expect the market to gravitate towards that level because the market has traded into the consequent encouragement of this week already. This daily week, the week of this candle. The week of this candle. So it has traded to the consequence encouragement. So it has left the discount part of it. So it's going to the premium. So I expect that level to be taken. Let's see what we have on S&P 500. Wow, for the past 2 weeks, I think I said the market will have to trade to this blue line. And where do we get it from? Let's go to the monthly chart. You can see that's the buy side liquidity we have been monitoring since last month. The market is just trading and it's yet to take it. So I still have that level in mind on S&P 500 because the market is just trading between the consequence encouragement of this week here. So I expect the markets to touch that level before going elsewhere. You have to deliver mine first. Uncle market, do you get me? So let's see what the daily candle looks like. So I'm still having the interest on this blue line. 4818.62. This level still is suspect to me. I need to be taken. Then US 30. US 30 has been behaving weird. It has gone into consolidation. It has been ranging. It's not that smooth. You can see it has been ranging. So I expected it to also go the same way. US Nasdaq and S&P 500 to go the same way. I expected them to go the same way. So here I have buy side liquidity pool resting above these levels. These are the 4 hours chart. So I expected this level to be taken. These levels. So I expected those level to be taken. Oh. Then the last but not the least, because this thing is becoming too long, the gold, the gold, the gold, the gold. How? Personally, I have no interest in gold for now. I have no interest in gold. I have no interest in gold because I'm not even interested in it. So it has been going in between this buy side liquidity pool and the weekly consequent encroachment of this candle. So it has taken those levels out for the past 1 month, and it has been going back and forth within that level. So it's not very easy for me to pick out the side where it's going. But on the short time scale, there's a suspected movement down here. There's a suspected movement here, down here. I expect that level to be taken during one of these news movements. So then we should go further down here, to this sell liquidity, because I'm not seeing anything bullish on gold at the moment. Because I'm not interested in it in the first place. But on the long run, on the long run, when the market opens and it shows the interest of the continuation of being bullish, if it shows the interest of continue bullish, then I will continue with the market. But presently, it's been held in ranging position. It's been held in the pot. So I expect this level to be attacked. Then this level, this swing here. Once this swing has been taken, then we'll continue upward. But without this level taken out, without this sell side liquidity being attacked, I'm not ready to consider looking into gold. So that'll be all for tonight. It's been long. I don't have the intention of staying this long, but I only want to do the proper analysis for the first week of 2024. So everything in this chart is just of my opinion. It's not a trade signal, because I'm not a licensed financial advisor. So trade responsibly. you you have the responsibility for your profit or your loss. So I only give my view based on what I saw in the market. Have a lovely night rest and productive